Well, thanks for having me here today. I've just been asked to give you a bit of an update on what's happening in the economy. So I will do that. I'll give you an update on what's happening nationally, but I'm also wanting to really focus in on your industry. Obviously, economics is fascinating, but when you're in an industry, it is also obviously much more interesting to hear about what's happening more broadly. So if we go to the first slide, just having a look in Australia, what's happening with the economy. We did have an interest rate announcement, a Reserve Bank board meeting last week. We did see a hold in interest rates. Obviously, that was good news. It wasn't an increase. The Reserve Bank at the moment does have quite a big challenge ahead of it. And the reason it's got a big challenge ahead of it is that inflation is still high. So when we have a look at the inflation rate, it is sitting at about 3.8%. The Reserve Bank tries to get to between 2 and 3%. So they do need to keep interest rates higher than, well, not higher than what they are now, but they do need to keep them at least at their current rate at this point. But on the other side, they also have a lot of challenges with how the economy is performing at the moment. So we aren't in recession. When we have a look at what's been happening over the past 6 months, though, we have seen very, very low levels of economic growth. So the economy grew by about 0.3% in the December quarter. It grew by about 0.1% in the March quarter. So it's certainly not shrinking, but it's not growing. And obviously, we don't want to go into recession. We don't want to see higher levels of unemployment. We do have a lot of cost of living pressures at the moment, so that makes it really stressful for people. And as a result, it will be an interesting next couple of months, or an interesting next 6 months to see which way they move. In terms of what the market is predicting with interest rates, what we have found is a big switch. So if you have a look at what the market was predicting a couple of months ago, they were predicting a cut not happening until mid to late next year. That's now shifted a lot. That's shifted a lot closer. So right now the market is predicting a cut sort of around January, February, and it could even go even earlier. So this morning I just had a quick look on the ASX, and the ASX interest rate tracker was recording a 50% chance of a rate cut next month. So I don't think it'll happen, but it does show you how significantly things have changed over the last couple of months. If we move to the next slide, just looking at what's happening globally, everywhere is cutting rates. So you can see there, Switzerland moved quickly. They started cutting in around March. Sweden then moved on in a couple of months later. We then saw Canada, the Eurozone, and then UK move last week. So a lot of talk around, who's going to go next. It's probably the US. So there was a bit of a market meltdown last week in the US because of a higher than expected unemployment rate. There is now a lot of pressure on the Federal Reserve in the US for them to cut rates. So what we can see now globally is these really very different conditions, because you can see there everywhere saw rising interest rates. It was unexpected. It was, it's obviously not particularly welcome by people. Business obviously affects businesses very negatively, affects people owning property very negatively. We can see it very closely. And as a result, it will be very good news once we do start to see some of those cuts come through. Moving to the next slide, I probably won't go into this in too much detail, but Australia is very sensitive to interest rates. We're probably much more sensitive than other parts of the world. And one of the main reasons is that we do have very, very high levels of debt. We've got very expensive property in Australia. And as a result, every time interest rates increase even slightly, households do feel a lot of pressure in terms of their ability to be able to manage their household finances. So it does also put pressure on the Reserve Bank, because even though we're not in recession, and even though people seem to be managing their finances okay, even though the cost of living's increased, there's only so far that can go. And in particular, we know that people have been spending down a lot of their savings over the past 12 months. So once those savings run out, obviously that does start to lead to a lot more challenges for people in terms of how they live. Looking at the next slide, looking at agriculture. So agriculture has been a huge contributor to economic growth over pretty much since the start of COVID. So you can see there, just having a look, I tracked it back from March 2020, so that was, the month we really started to see the challenges with the pandemic start to emerge. And you can see there the contribution of each of the major sectors in the Australian economy. So agriculture's been a huge contributor. There's been a few factors. Obviously weather, that has helped hugely. We have had really good weather here in Australia. Also, there's been bad weather overseas, so as crops were burning up in the US and because of their drought, we were seeing some really great weather conditions here. We also didn't have too bad an impact. COVID really didn't have a huge impact on our ability to work, particularly here in Queensland. We saw quite different conditions, obviously in Victoria, but here in Queensland it was pretty light on. And then there's been a lot of geopolitical issues which continue to roll on. So I'll talk about how that influences agriculture in a sec, but it does have huge implications. I think people often think of agriculture as being very localised and very impacted by weather, and that is by local demand. But probably of all property sectors, and probably of compared to many economic sectors of Australia, it does get heavily influenced by what's happening around the world, and we can certainly see that at the moment. Looking at what is contributing to Australia's the agriculture sector at the moment, you can see here how much cattle or beef is contributing now. So I guess historically, we have spoken a lot about Australia riding off the sheep's back. So sheep don't really contribute much anymore in Australia. It is beef. And it is beef and it is wheat, and sheep isn't even in the top 10 anymore. So it has been replaced by nursery, cut flowers and turf. So sounds quite a niche sector, but it is now bigger than the sheep industry at this point. But you can see there beef, hugely important to our agricultural industry and sitting there at number one at this point. Going to the next slide, having a look at what happened over the 12 months to 2022. It does take a while for some of the agricultural data to come through. We can see there that wheat was really really saw a lot of growth over that time period. So it really was driven a lot by weather, as I mentioned before, but also it really had a huge impact, particularly on Western Australia. So one of the interesting things we saw in Western Australia, we often talk about mining as being a huge contributor to economic growth there, but the state of the wheat industry also had a really big impact over that 2022 and 23. In terms of longer term, we are less dependent. There's been a real shift since the 80s in terms of what we've been relying on. More dependent on canola, cotton, lint and nursery, and less dependent on wool, sugar and pigs. So there has been this kind of change in the way that agriculture plays a role in terms of our economic growth. But well and truly, it is all about wheat, and it is all about beef at this point in Australia. On to the next slide, looking at beef consumption. So this is quite an interesting infographic. There's a lot of detail here, so I'll pull up beef in a second, but it just looks at the amount of beef that everyone's eating, the amount of chicken. Hong Kong eat the most meat, but it is mainly pork and chicken. If you move to the next slide, looking at beef, you can see here that we are one of the biggest consumers of beef in the world. So we're sitting there at number 4. Argentina, Zimbabwe and United States eat more per capita. But no, there's no doubt that this is one of the reasons beef is such a big industry, that we do love our beef, but also that we do produce a lot and we are able to export it. So it is a major contributor to economic growth in Australia. Looking at the next slide, in terms of land prices, it's been a real bumper time for agricultural property. So you can see there from about 2010, probably about 2013, over the past decade, we have seen this incredible growth in land prices for agricultural land across Australia. So this is very consistent with property prices. We know that particularly since the pandemic, we saw this huge increase in the value of property as interest rates went down and people put a lot of money in residential property. But agricultural property actually has performed far better And we did see a little bit of a dip, so you can see there that at the end there's a little tiny dip, and a lot of that had to do with what was happening at the end of last year. So there was a lot of negativity in the agricultural sector, particularly for agricultural property, pretty much because there was a lot of concern around drought in particular. So that did lead to a bit of an adjustment, but it was a tiny adjustment. So I think that was probably the main point to take from this, is that we have seen this incredible surge in farm price in this farm price index. This is from the government. They produce this index, and we have seen a correction, but it is a very, very minor correction. So no relief for land prices, which obviously if you own land, it is good news. If you're looking to acquire land, it does make it far more challenging. On to the next slide, looking at what's been happening with cattle prices. So I mentioned before, obviously don't need to talk through this too much with you guys. You're in the industry and seeing it daily. But we did see those incredible prices being paid during the pandemic, and then we saw that really big drop-off that happened in 2023. So it dropped down to a 9-year low. So there has been a recovery. This is data we pulled out. I think we got this probably about a week ago. There has been quite a significant recovery, and obviously really good news, quite different to where everyone was expecting the year to go at the end of last year. It was looking far more negative at the end of 2023. On to the next slide, looking at where we're exporting beef. I think what's interesting is that it is the US at the moment, so a lot to do with poorer production levels in the US in terms of beef, followed by Japan, and then obviously China. China does represent a huge growth opportunity for Australia. Obviously China does do a lot of weird things with tariffs, which can destroy industries. We saw, particularly in the wine industry, last year some huge negative impacts with some of the tariffs that they implemented. But I think also what's really good about this chart, it does show the diversity of where we're exporting beef, that it's not just China, that we're not just fully reliant on China like a lot of our industries are, education in particular. I think perhaps some of you may have seen today in the paper that a lot of the economic growth for some states, particularly New South Wales and Victoria, is very dependent on international students, so from China. So we do lose those students if China just puts bans on foreign students coming to Australia. It can have a very negative impact, or huge negative impact, on economic growth. For beef, though, you can see there that there's a lot of different places that we're selling to at the moment. So it does really strengthen the industry and strengthen economic growth more broadly as a result. On to the next slide, just looking at wheat prices. So I won't go, obviously we're here to talk about Brahman, not about wheat, but this shows what's been happening to some of the volatility with wheat prices. So again, we did see a surging of pricing, which Australia was very, very well placed to take up on. Again, going back to that 21, 22 time period, we did see incredible wheat production in Australia when everyone else couldn't produce any wheat. But the pricing does remain hugely volatile, and I think this is one of the challenges we're seeing with wheat at the moment. It's being heavily influenced by what's happening in the Ukraine. Right now, there was a Black Sea deal that was put in place to allow safe passage of wheat to get out of the Ukraine, but that's just collapsed. So terrible for the Ukraine, obviously, but good news for us. So I think there's always positives and negatives that are coming out of these conflicts. Looking more broadly at agricultural production, this is the forecast that's put out by ABBA, so you're possibly quite familiar with it. You can see there was that big surge in activity that occurred. We saw that incredible level of agricultural production through the pandemic. We saw that drop off at the end of last year, and more positively now there has been a pickup. So I think this is probably the biggest change that I've seen in the last probably 6 months. I know talking with our rural teams at Ray White at the end of last year, it was very, very negative. We were talking a lot about people with, sheep, for example, just unable to sell them, hugely challenging conditions in the industry. And I think obviously it's weather related, so obviously the weather didn't turn out quite as bad as expected. But it is positive that we have seen this return to higher levels of production. And at this point, weather permitting, it does look like this will continue. So looking at a far better 2024 and potentially a far better 2025 than anyone expected, certainly at the end of 23. Going to the next slide, looking at some of the big global issues that are impacting property at the moment, not property, agriculture at the moment. The big one, of course, is that Black Sea deal. So that's collapsed. So that's going to really it will likely lead to higher wheat prices, or be one of the factors contributing to higher wheat prices. We have seen the Indian government ban basmati exports. So they have a lot of concerns about food security at the moment. So obviously very, very good for our rice industry. And then Chinese tariffs on wines, which I mentioned before, so they were just dropped quite recently. So very good news for the wine industry. It is really hard to predict what's going to happen to agricultural production. Obviously, it's heavily influenced by weather, but also these factors also make it hugely difficult because we know how quickly governments can change policy. And how that does have a very, very real impact on the price of products and then also the demand for products. But I think one of the things that we can be positive in Australia, I know that there's always problems with agricultural policy, but at the same time, our government is, in most cases, they do tend to work fairly slowly and carefully with the industry. So we don't often see very quick decisions made that have a huge impact on the industry. Looking at the next slide, migration levels. People want to be in Queensland. We can see that very, very clearly. If we have a look at where people are coming from, they are coming from Sydney and Melbourne. Obviously, Melbourne, the Victorian economy is probably in recession at the moment, so that is leading to a lot of movement out of Melbourne up to Queensland. And then we've also got a lot of people moving from Sydney. So I think, a lot of affordability issues make it very, very challenging for people to remain there. So Queensland is the place to be. We can see it in terms of population growth. It's not the fastest growing state. I mean, if we have a look at New South Wales and Victoria, they are growing quicker primarily because they do get a lot more international migration. But here in Queensland, in terms of percentage growth, it is the strongest. It's very good for the economy. We know that population growth does drive economic growth, so that's a positive. But probably the biggest challenge we have now is around housing and affordability. So even though, Queensland, Brisbane, southeast Queensland has historically been a lot cheaper than Melbourne and Sydney, we are now seeing pricing edge a lot closer. And so much so, if you have a look at somewhere like the Gold Coast now, the median on the Gold Coast is now higher than the median in Melbourne. So, we've had this incredible adjustment in terms of how prices have moved. On to the next slide, looking at what's happened to pricing in regional Queensland. You can see there, this is house prices. We had a very, very minor dip during when interest rates started to increase. So it's been an incredibly strong market. So you've probably seen this, we've seen it everywhere in Queensland. Like there hasn't, even Townsville. So Townsville was a very interesting market because it was a property market that was very, very flat for a prolonged period of time. But even that's seen quite a significant pickup in pricing at the moment. It's being driven by a lot of things. Probably the main one is that population growth, that people do, want to be here. People are moving up there. There's been jobs created. But also we've had this very, very sharp rise in construction costs. So it's really expensive to build at the moment. If we have a look at how much the cost of building a new home has jumped, it's jumped by about 30-40% over the past couple of years. So that does keep housing more elevated. Obviously, if you're someone looking to build a new home and it's going to cost you, $600,000 for a brand new home, and you can buy one that's a couple of years old for $500,000, it does usually mean that you don't bother building the home, you just buy something established. So this is one of the reasons that this level of pricing is expected to continue. Looking then to the next slide, luxury market. So I'll just do a few, I'll probably just finish off with a few of the top lists of what we're seeing around Australia at the moment. I've looked at both coastal and inland. I thought, obviously coastal, not surprising, Byron Bay is recording the most 5 million plus suburbs. So That is a market that has seen incredible price growth over the past couple of decades. But if you go to the next slide, having a look at regional areas. So they're not really regional. They're kind of inland. It was kind of hard to work out the cutoff. But you can see that there's a little bit more diversity in the types of places that have seen a high number of luxury sales over the past 12 months. Two in Dubbo, so I don't know where they were, but moving to the next slide. The areas that we have seen the strongest price growth. Most price growth over the past 12 months, it really has been Surfers Paradise and Gold Coast and also Sunshine Coast have really dominated. So this is actually regional Australia in total, so it's not just Queensland, but you can really see how that top end of the market in Queensland has really taken off. So I have heard it has been a lot of farmers downsizing, buying in these areas. There's been a big contributor. But it shows that it's quite diverse, the market that's looking at these areas. We often talk about it being Sydney and Melbourne people moving up with their Sydney and Melbourne money, but it does seem to be also a lot of wealth that's been created here in Queensland that is pushing up these prices. On to the next one, having a look at inland regions. Middle Ridge is topping the list, so getting close to $1 million. We are seeing more and more inland regional areas popping up that are seeing median pricing in excess of $1 million. Toowoomba West's coming in second in Rangeville, so quite a few Toowoomba suburbs there, and obviously again really dominated by Queensland. We've only got one WA town in there with Exmouth, but everywhere else is in regional Queensland. And then on to the next slide, looking at something to think about, a bit of regret where you should have bought 10 years ago. It was probably Mermaid Beach. If you were looking coastal, that's increased from $1 million median to 2.5, so more than doubling over a 12-month time period. Again, really, completely dominated, I think, by Queensland, except for one, New South Wales with Bangalore. And then I'm just going to finish off with regional inland, which is the next one. More so New South Wales. Actually, Queensland doesn't feature, so we've got sort of more those lifestyle areas sitting there. Bowral topping the list, just close to Sydney. So hopefully that was of interest. Does anyone have any questions or comments or?
I'll just grab the microphone.
Yeah.
Anybody wants to ask questions, just because we're recording this will help. Any questions?
No, answered everything. Thank you. Oh yes.
I trust you better.
A little bit of left field, but as an old sugar producer, where does the sugar industry fit with the contribution to the Australian income?
Yeah, it's not featuring so much anymore. So I don't know. I mean, I don't know much about the sugar industry, but has it moved offshore, perhaps, for production, or perhaps less consumption, maybe? But yeah, if you have a look, if you want to take it back to.
It doesn't really matter. There was a great reduction in prices in that about 15 years ago, and I think that really took them out of the headlines, and now it's on an incline.
Yeah, interesting. Just wrote it.
I've got a question.
Yeah.
There was a lot of talk just in terms of like the Japanese outlook sort of offset the downfall in what happened in the US share market. I just noticed on the slide that sort of, their rates are very, very low.
Yes.
Like next to zero. And they were the only one on that chart that had that. Can you sort of tell us a little bit about?
Yeah. So.
And how the Japanese economy sort of influences that?
Yeah, I mean, Japan's fascinating because it is an economy where they want inflation. They haven't had it for 15 years because their economy's been so weak. So they're quite excited if they can increase rates, and it's also interesting because that they were the only country, or one of the few countries that actually had negative interest rates. So, which is kind of a weird concept to imagine, but I guess theoretically it means that banks pay you to take money. It doesn't quite mean that, but it does mean that the cost of borrowing was so low, and even then they couldn't stimulate the economy. So they do have longer term trouble at the moment. So right now their economy is doing a lot better. It's very cheap for us to travel there. We have seen a lot of people heading over there because it's incredibly cheap at the moment. Our dollar's relatively strong. But overall, I think what Japan shows us, there's a few things it shows us from the property market. I guess from an economic perspective, what it shows us is that if you block migration, that's kind of what happens to your country. It does stagnate, and the economy doesn't grow. So it does, obviously there's a lot of concerns around migration in Australia, but I guess that's, kind of a broader impact. But also what's interesting about the property market in Japan is that you would expect that if an economy is, in recession for 15 years and is seeing no population growth, that you'd see a drop in house values. But what we've actually seen in Japan is that Tokyo prices have continued to increase, but when we have a look in regional Japan, people just throw away the keys and walk away from homes. Like have zero value and kind of a hassle to own. So it is a fascinating market for a lot of reasons. But I guess from Australia's perspective, it is an export market for us. They're very keen to invest in Australia. So because their interest rates are so low at the moment, they can't get returns in Japan. So they are looking elsewhere for better returns. So Australia is a target for that reason.